why retail traders continuously get wrecked in the market. So here we have price action on GU and the hour time frame, and I want to give you a quick run through essentially what retail trading is if you are new to it, and if you are a retail trader, then stick around because this video is going to hit some sensitive points. Retail liquidity essentially is areas in the market where you either place stop losses or orders, right? So things like double tops, consider liquidity. Double bottoms, liquidity. These areas in the market are essentially liquid areas, and you'll likely see sweeps that takes out the liquidity and out the liquidity, because right here we have resting what? Stop losses and buy stops. The people that trade breakouts, when they break the high, instantly tags them in. And then there's stop losses and buy stops with stop losses just below here. The same is true right here, right? We have stop losses from buyers and sell stops from sellers. Now the buyers get tagged out, sellers get tagged in, then the sellers get tagged out. What's a different type of liquidity? How about support, right? Areas of support. Areas of support essentially are areas in the market where price just seems to be hovering around a certain area, and for some reason retail traders think these areas are somewhat significant. And essentially, to us smart money traders, we know this is liquidity, right? We know that stop losses lay below these levels. How about trend lines? Trend lines are exactly the same, right? Same concept. Retail traders think somehow this is going to happen, and in reality, this happens. Stop losses underneath, and what else do we have? Sell stops, right? People that are selling the breakout. So there are three different types of liquidity. We have double tops, double bottoms, support, trend lines, and then also resistance, right? Multiple different scenarios of retail liquidity. Areas in the market where retail traders think that price will hold for some specific reason. So if we look now, first and foremost, I want to give you the retail perspective. The retail perspective is going to be something along the lines of, okay, we've had a break of structure, or this is a break of structure, whatever they want to consider. Okay, now we have a downward trend line. Multiple different types of traders with different strategies. One trader's thinking, okay, we have a downward trend line, so now we are bearish again and we're going to break this low. So next time price gets to this trend line, I'm going to sell and put my stop loss above this high, and I'm going to take out this low, and I'm going to make a 1 to 3. Then there's the opposite trader, and that trader is the breakout trader. Okay, if we now break this high right here, we broke through a trend line, I'm going to put my stop loss just below here for whatever reason that's absolutely random, and I'm just going to target a random level up in here. 1 to 4. Great. Well, what other types of traders do we have? So there's the trend line traders. Next, we have the double bottom traders. Okay, well, there's a double bottom right there. Price is tapped in, pushed off, tapped in again, pushed off. Okay, now I'm going to start to long from this level. So there's another type of trader. There are people that are going to long as soon as price gets back to here. Stop losses, I don't know. I have no idea. Stop losses down here. However they want to use it. What are they going to take out? Oh, we're going to take out this high. Okay, great. Or even this high, because there's a trend line. Okay, great. Other traders. Oh, this is a level of support, right? Prices continually come to the same area. So I'm also gonna long from here, and my stop loss is gonna go to here, because if it breaks this, then it's no longer support. Who else? Then there's gonna be the sellers that are like, well, I'm going to trade the breakout. If price breaks here, it's probably going to go down. And therefore, I'm going to put my stop loss above this high and take profit below this low. So there are many different types of liquidity, right? And these are real traders in real markets every single day, trading these retail strategies, expecting them to pay dividends. As a smart money trader, myself and you guys also, we are understanding that this is our area of demand that put in the high, that originally changed character, resting below all of this liquidity in here. And now we have liquidity to target. We're also going to take out this high because the order flow essentially say so. So as a smart money trader, I personally would be looking to take a long with stops below the demand level and take profits at the high, 1 to 9. Now, what you are about to see is not accidental. This is the way the markets really move. Markets gravitate to and from areas of supply and demand for specific reasons and to take liquidity. So this happens time and time again because essentially this market is completely operational based on an algorithm. The algorithm is specifically set to create and take liquidity. In other words, collect orders. So where orders are in the market, that is areas of liquidity, unless you are positioned with orders from the banks. When you are positioned with the algorithm, then you just simply stand in the way and allow price like a river to take you with its flow, right? Retail traders are swimmers swimming upstream. Smart money traders are swimmers swimming downstream. We just allow the waves and the power to take us. We don't try and fight it, right? You can't fight the banks. Everybody's angry with the banks. I am so grateful for the banks because if it wasn't for the banks, I wouldn't make so much money. So, that, my friends, is absolutely for a reason. There is no accident behind that move. What that move just did is clear all the levels of liquidity that were resting below here, taking out all of the retail traders, not for the purpose of purposefully losing retail traders' money, more to actually clear the positions to be able to dominate the market. That's a thing that very many people don't actually understand. Now we've had a trendline breakout. So many traders, all of the people that were longing underneath here, all the people that were trying to buy here with their stop losses just below the levels of support, well, they got wicked out. All the people that were selling on the breakout with their sell stops just got stopped out. All of the people that were selling on the trend line with their stop losses just above this high just got stopped out. All of the breakout traders that were trading the break of structure or the high getting break, whatever one, right? With their stop losses below these lows, just got stopped out. Whereas us, on the other hand, we positioned ourselves in the way of the bank's order flow. And guess what? Within 2 single candles, we have just done 9.9 risk to reward. That is what's possible when you understand and align yourself with the bank's algorithm. And that's what we mean when we say we understand the liquidity algorithm of the market we are trading in. Thank you guys for joining us here in this video where we show you why you should be trading with the banks and not trading with retail. If you guys have come from a retail background and you looking to switch over to become a smart money trader, good news for you, we actually teach. You can find all of our links and resources down below in the description box that have all of our links to courses and PDFs. And we do also offer a signal service. You can position yourself in the same trades as me. Thank you guys, and I will see you in the next one.